Hey, what's up guys? We're back with another video to talk about the highly anticipated Robinhood IPO that's set to take place this Thursday, July 29th. And there's definitely a lot of exciting news around this IPO with all of the new features that Robinhood is bringing to their platform. So we're going to talk about some of those new updates and how you could potentially make a lot of money with them in the future. And then we'll talk about whether or not you should buy this stock come Thursday. So if you guys are new here, my name's Hunter and we talk about all things investing on the channel. So hit that subscribe button to join the team and let's get into the wood here. All right, so before we talk about whether or not you should actually buy this stock, I do want to hit on those new features that Robinhood now offers, which is pretty much changing the game for stock IPOs. So for those of you who haven't heard, they now have a special program for their users called IPO Access. And this allows Robinhood to work with investment banks to provide a set amount of shares for their users to potentially invest in before they actually are available to the public. And this is actually a pretty big move for Robinhood because these types of pre-IPO investments are generally only available for very wealthy investors or large institutions. But as many of you guys know, Robinhood's mission from day one has been to democratize the world of investing and level the playing field for everyone in the market. So I definitely think it's cool how they're giving retail investors the chance to buy stocks at the actual IPO price before it becomes available on the public markets. So usually when stocks go public, it's later in the day and all of the early investors already have significant holdings in the company. But then once the stock hits the market, an insane amount of volume comes into it, and it's near impossible to buy the stock at that exact IPO price because it usually opens a lot higher than that. Depending on what the stock is, it could very well open 30, 40, or even 50% above what they had initially set for that price. And this is because the demand is so high when it comes into the market that everybody tries to pile in all at once, and the price generally shoots up in a matter of seconds. And let's look at a perfect example of this, which was Coinbase. So this stock had a ton of hype around it because it's pretty much the Robinhood for crypto. So they had an IPO price that was set at $250, which means that investors who had early access were able to lock in that price of $250. Then look what happened literally as soon as it hit the market. It went from that $250 mark all the way up to $330 in a matter of minutes. And as you can imagine, these sharp price swings generally turn into just an hour or two of straight pump and dumps as so much volatility and volume comes in at once. So now Robinhood is allowing you to potentially be one of those early investors and lock in shares at that specific price before they hit the market. And this way, no matter what happens, you'll be locked in at that $40 or whatever the final price that they decide is. So let me show you how this early access works. So if you open up Robinhood and go onto the browse section, you can see right at the top of the list, there's an IPO access button. And then if you click on that button, you'll be directed to the page where they list out all of the IPOs and all of the information that goes along with them. And then if you look in the second slot, you can see Robinhood Markets, which is going to be trading under ticker symbol HOOD. So if we click on that, you can see all of the details and see that the IPO is between $38 and $42 as of right now. And then if you scroll down, you can see the full report of the public filing as well as the timeline. So you can see everything else that is on the list. But as of right now, they have filed and determined a price range. Now, if you select request shares at the bottom of the corner, you'll then be able to read more on how the process works and different factors that affect your order being filled or not. And then the last step is just to request a specific amount of shares that you're looking to buy. So then you just go in here and plug all of that in and set the amount of shares that you want to buy at the specific price. And then you pretty much just wait and watch. And Robinhood says that the process selects investors completely at random, so there's really nothing else that you can do. You just have to wait and see if you were selected come Thursday morning. All right, so that's how their new process works and how you would go about requesting early shares. But now the question still remains, should you buy Robinhood as soon as it hits the market on Thursday? And my answer is that if you're not selected by the new program, then no. And I'm gonna explain why. So by no means am I saying that Robinhood is gonna be a bad investment for the long term, but the amount of hype that surrounds IPOs in this current market is absolutely insane. And so many investors get caught up in the mindset thinking that if they don't buy shares as soon as it hits the market, they're going to miss out on the huge move and never have an opportunity to buy again. But from what we have seen with essentially every single stock in the market this past year that's had just as much hype, if not more hype than Robinhood, that's just not the case. Honestly, from what I've seen, the more hype a stock has around its IPO, the more it tends to work against investors who don't have early access. So here's some popular examples that I'm sure you've heard about that quite literally went straight up as soon as they hit the market and then straight back down afterwards. So you guys already saw Coinbase, but that one went straight up and then straight down. Qualtrics, same story, shot up as soon as it hit the market and then crashed right back down. Same with Krispy Kreme, Poshmark, Bumble, Oatly, ZipRecruiter, DoorDash, and the list goes on. You can see that the majority of these stocks put in their highs either the first day or within the first week of going public. And unfortunately, this is the point where most retail traders were forced to buy them. So personally, I have never bought a stock on IPO day and don't plan to, just because of all the volume and volatility that comes into the market. And remember that it's very rare for a stock to go public and then only go up from there. The majority of the time, it's going to correct a few days or maybe a few weeks later back to those levels, or a lot of the times from what we just saw in the previous examples, a lot lower. So that's where you'll be able to buy into these stocks that you like for the long term, because then you don't have to deal with all the FOMO or run the risk of buying at the highs and then having to wait months just to break even. So I think that's the best thing you can do. Just wait a couple weeks before you even think about buying it and then revisit it, and more often than not, you're going to be coming back at a much better price. I'm sure Robinhood's IPO is going to be all over the news and attract an unbelievable amount of retail investors. But if you do love Robinhood as a long-term investment and you get the opportunity to invest in this early IPO access program, more power to you. But I do have a feeling that not many people are going to be selected, so just be careful with that. So that's my take on it. Either way, it's going to be interesting to see what happens. But if you guys have any other thoughts or questions, make sure to leave them down in the comments below. And I also wanted to mention that we do have a free investing Discord group where we talk about market setups and stocks that we're all buying and selling. So if you wanted to join and connect with some other investors, I'll leave a link down in the description. But thank you guys for watching all the way through. I'll see you guys in the next one. Peace.